I'm Ernie Humphrey, Educational Programs Leader for Proformative, the largest online community for corporate finance, accounting, treasury, and related professionals. I'd like to welcome everyone to today's webinar, FCPA Compliance, Practical Steps to Establish and Maintain Control Across the Globe. Compliance with the Foreign Corrupt Practices Act, FCPA, is one of the greatest risk exposures companies face in doing business across the globe. There is more to FCPA than just legal conjecture and what-if scenarios. There was a material impact being felt by many global companies as federal authorities step up their FCPA enforcement actions. Anti-bribery enforcement is on the rise, and penalties are growing, with hefty fines being doled out by the millions. Data analytics are one of the most powerful ways to validate the completeness and accuracy of books and records, providing an invaluable early warning system against bribery and corruption. Today, FCPA compliance and data analytics experts will outline best practices for incorporating analytics into your FCPA compliance program and offer real-world success stories and key lessons learned. You will also learn where and how to get started with common tests for identifying non-compliant activities and how to prioritize and take a targeted approach to compliance. I would like to thank ACL, whose commitment to thought leadership helps us make this webinar possible and delivered at no cost. A quick note on today's agenda. First, we'll hear a joint presentation from our featured speakers. Then we'll move to the interactive Q&A session, where we'll spend the remainder of our hour. We'd like this to be an interactive experience for you. So if you have any questions at any time, please go to the questions area in the GoToWebinar control panel and send us your questions. We can't promise to get all of them in, but we will do our best and we'll follow up afterwards with any questions we did not get to. A few logistical notes about the webinar today. A link to today's presentation and video recording on the webinar will be sent out to all attendees within 24 hours of the event. Those who would like CPE credits need to answer all polling questions during the event and should have pre-registered for CPE credit. For any questions on CPE credits, please send an email to cpe@proformative.com. Again, we encourage you to ask questions on today's topic via the questions box in your GoToWebinar control panel at any time during the webinar. Finally, you'll be asked to take a short survey today regarding the webinar as the webinar concludes. We greatly appreciate your feedback regarding our event today, as we always strive to improve the ROI we offer our event attendees for their valuable time. A quick word about Proformative. Proformative is the largest online community resource for senior-level corporate finance, accounting, treasury, and related leaders. Proformative connects corporate finance leaders to provide instant advice and insights on the tough financial and strategic challenges they face every day. Let's get started by introducing today's featured speakers. Phil Lim, Product Manager, ACL. Phil has over 5 years of experience working with compliance and audit groups of Fortune 500 companies, leading implementations of technology-enabled assurance programs to test and monitor controls. As a product manager, he is currently responsible for ACL Services' integrated content portfolio, from strategy and planning to execution. Including in this scope is to arm risk and assurance professionals with better tools and methodologies to build better assurance programs. Phil has significant international experience. He was a key ACL consultant in Siemens' extensive continuous controls monitoring project, combining and analyzing purchase to payment data for over 1,000 globally decentralized corporate entities daily, aimed at detecting potential FCPA violations. Our other featured speaker today is Jeremy Clopton, Senior Managing Consultant, BKD. Jeremy is a member of BKD's Forensics and Valuation Services Division and specializes in providing fraud investigations and forensic data mining services. His forensic data mining experiences include all major industries in both investigations and prevention projects. He has also helped design and implement continuous auditing solutions for organizations in a variety of industries, including Fortune 500 companies. He is a frequent speaker on the topics of data analytics, continuous auditing, and forensic accounting, and has appeared before local and national organizations and international webinars. Jeremy is a certified fraud examiner, ACL certified data analyst, a member of the American Institute of Certified Public Accountants, Missouri Society of Certified Public Accountants, and Association Fraud Examiner. He is a 2005 summa cum laude graduate of Drury University, Springfield. With that, it is my distinct pleasure to hand the floor over to Jeremy Clopton at BKD. Jeremy, please take it away for us. Thank you.
Thanks, Ernie. I appreciate that introduction. Good morning or good afternoon, everyone. Glad that you all could join us for today's webinar. I think we have a very interesting topic, and a topic that is going to be probably growing interest over the next few years for everyone on the phone in a lot of industries and companies worldwide. We're going to focus in on the FCPA, but really the broad topic we're talking about today is really anti-bribery, anti-corruption. We want to start off with talking a little bit about the stakes. I mean, everybody wants to know, why do I need to be concerned with this? What is at stake? What's interesting is that the FCPA has been around for quite some time. didn't necessarily hear about it as much in the past, but in fact it's been around since 1977. And back then the fines were smaller, the enforcement actions that you heard were smaller. You didn't hear a lot about it in the media, and really you can tell over the last few years that the stakes really have been growing. In fact, you can see some of the companies and organizations there on your screen that have been subject to fines and penalties. And just since 2010, there have been almost $2 billion in penalties doled out to more than 20 organizations. And you can do the quick math there and determine that is a lot of penalties for every organization on there. Not all of them are having, hundreds of millions of dollars, but to get to almost $2 billion for 20 organizations, we're talking pretty hefty fines and penalties across the board. But really, the financial impact is not the only thing at stake here. You can see personal liability as individuals can be held liable in FCPA violations. There are both criminal and civil penalties that apply not only to organizations, but also to individuals that violate the FCPA. Those can be fines, jail time, and they can get pretty hefty as well. Not quite as large as the company's fines, but they can also get very large as well. And then the other stake that is here that sometimes you don't see necessarily the financial impact, but it definitely can have a financial impact, is the damage to your organization's reputation. We can all probably think back over the last few months, every time we've heard the FCPA in the news, and any company that it's tied to, and the instant reaction that you have when you hear that an organization or a company has violated the FCPA. And for those of us that understand, like everyone on the call, that it can be something very small. When you violate the FCPA, it doesn't necessarily have to be some multi-million-dollar bribery scandal. But anybody that hears that in the media and hears FCPA violation and a company's name tied to that, there is a big reputational impact that can have, and as we all know, that can then translate into a financial impact. So we want to talk about the stakes to kind of put things in perspective here, that it's not just financial, it's not just the organization. It can be reputational damage, it can be personal liability. But what's more is there's also a moral component to this. And so I'm going to have you talk a little bit about what the moral issue is here rather than just the financial impact.
Yeah, thanks, Jeremy. So as part of that reputational damage, you think about why is it that when you hear something in the news about an FCPA violation, why does it garner so much attention? And a large part of that is that there actually is a huge moral issue behind the FCPA. So you might ask, well, why did the FCPA and other similar legislations and regulations come to exist in the first place? So we can do a little bit of a thought experiment to examine really where these regulations came from and why they exist by illustrating that with a bit of a case study. And so I thought I'd throw this on the board here and present a scenario. Let's say that you're part of an organization that manufactures and sells trains. That's your main line of business. You're in the manufacturing sector. And let's say a foreign government, say the foreign government of Made-Up-istan, and this is a government that needs to purchase some trains for their national railroad. And they've got a budget of about $100 million that they want to spend on this project. And let's say that you, as part of this organization that builds trains, in order to obtain the business, let's say you're a sales executive, let's say to obtain that business from that government minister, you tell that government minister in charge that, you know what, it's a big deal, it's a $100 million deal, I'll slip $100,000 into that deal, and we'll direct that to your favorite charity. And you think, well, what's the issue? It seems like everybody wins in that case because the government of Made-Up-istan gets its trains, you get the business as an organization, and this favorite charity of the government minister gets some money. Now, whether that charity is legitimate or not is a question in itself. But potentially that charity may be just a third party or a channel to funnel funds back to the government minister's pocket. And if that is the case, then the reality is that that $100,000, if you trace it backwards from the charity to your organization, and ultimately it came from that government of Made-Up-istan, it went from that people of Made-Up-istan. to the minister's pocket without authorization of the people. And this is what gets people who are in those countries with lower corruption perception indexes, like in the BRIC world, so much more enraged about corruption and when this occurs, because that's really wealth and work that has gone into building that wealth in that nation that has gone to the government officials illegally. And secondarily to that, it's not fair for the competition. So what if there was a competitor out there that was also part of that proposal process that had better trains, and they were willing to offer them for less, but they were not willing to own up to the government minister's request for a donation to his favorite charity. And so that ultimately becomes the major issue behind why the FCPA exists. Now, Jeremy, did you have anything else to add on that moral issue question?
No, I think that's a great example, I think, Phil, of really what the bottom line here, that it's not just the money that we're talking about here. It's a bigger issue.
Yeah, and just one more thing to add upon that is, as organizations try to become good corporate citizens, and that drive to become a better corporate citizen engages, this is one of those issues, just like being eco-friendly, being ethically correct is also a very important issue for a lot of organizations seeking to become a better corporate citizen.
Definitely, I think so. Let's go ahead and let's talk about a couple case studies. I think, Phil, that scenario that you provided about Afghanistan, which I have to admit is one of my favorite countries. I think let's talk about a couple case studies, because I know you and I have both had experiences where we've dealt with the FCPA specifically from compliance standpoints, from investigation standpoints. So let's talk about a couple case studies. Coming up on the screen now is a case study of an organization that I worked with, and they really had a need to come up with a solution. They had an FCPA violation. It was not necessarily the largest violation probably in the history of the FCPA, but the bottom line is they had a violation. They had been undergoing an investigation, and now they had a need for a compliance plan. And that's one of the things that once you have this issue with the FCPA, you're going to have a compliance plan. Now, ideally, you're going to have a compliance plan on the front end, and that's going to help you identify issues before they get to the point of a violation. But in this case, this organization, they had a violation, so now they have to come up with a compliance plan. And they had a little bit of a challenge. They had 8 different countries that they were really keenly interested in determining what was going on within the accounting books and records of those countries. One of the big problems they had was that there were multiple accounting systems, and those accounting systems were actually maintained within the countries where they had locations. They weren't necessarily accounting systems that the accounting and finance department had direct access to the details back home. You know, in some instances, it was a kind of a batch processing that integrated into the overall general ledger system. And the details of those accounting systems really maintained outside of their home country and some of the other outlying countries. So we had a problem where there wasn't a lot of access to the data. There was a lot of data. We look at, I think a single month is in the neighborhood of a few million lines of detail, and that's pared down just for the 8 countries. So we have a lot of data. We have multiple accounting systems. Nobody really has access to it. And we need to figure out what we're going to do. So our solution was we're going to work with those countries, and we are going to obtain access to those data sets where we can go in and on a monthly basis, and in this case, we're going to talk about monthly compliance monitoring, and I know Phil's going to touch on continuous monitoring in a little bit. For this organization, continuous, for them, monthly was good enough. So we've come up with a monthly compliance plan for them where we access their data on a monthly basis. They access the data. There are analytics run on that data every month. There's standard analytics that are run every single month, so they're able to get benchmark data. They're able to look at trends over time. And then what happens is those analytics are all compiled into a single dashboard. And the results of the details of all of those analytics are then attached to the dashboard. Now, this organization does not have an analytics solution in-house. Their best analytics solution is Microsoft Excel. So what we have done is essentially giving access to all of the data, which they don't really have, by way of these details. So on a monthly basis, their management team will receive a PDF of a dashboard, which allows them to very quickly and effectively see all of the key metrics that they're wanting to monitor on a monthly basis, and then they need to monitor all of their red flags. Some of them are around keywords, vendor types, vendor additions, changes, cash transactions. They can see all of those analytics, and then accompanying that is an Excel file that then provides their internal audit, compliance, and accounting teams all of the details that they need. So it's a pretty simple solution, really, that provides everyone from management all the way down to internal audit staff what they need to effectively and efficiently perform their monthly testing for FCPA risk. And that's just one example of a solution, when it comes to an FCPA compliance need. And Phil, I know you have another.
Yeah, thanks, Jeremy. The other, an organization that I've worked with, again, an FCPA violation was their compelling need. And they had a compliance plan, and they needed a compliance plan in place. But the challenge here was a little bit different. Instead of a set of disparate accounting systems, we had an organization where they were performing a lot of joint ventures and a lot of acquisitions in worldwide markets, and were doing this at a fairly rapid pace. And in doing so, they noticed that there was quite a bit of risk that perhaps management would not performing their proper due diligence of these joint ventures and acquisitions and business partners when onboarding them. And so the solution here was a little bit different. The management implemented a set of, along with compliance and internal audit, a set of assessments of the control environments of their worldwide markets. So, for example, isolating Brazil and focusing on them for a period of a couple of months and bringing internal audit on site in Brazil with a program that would assess the internal control environment. Things like making sure that there's a hotline in place for employees to provide tips on potential bribery or corruption issues. An employee education program, so the employees are educated on what constitutes a bribery violation. A firm policy in place that's being enforced. Management that's bought in. All of these assessment activities occurred and also followed up upon by their internal audit and compliance groups. For those markets where there was significant risk, we also implemented a set of continuous monitoring data analytics that would allow their central organization headquartered in the United States to have visibility over some of the red flags that were being identified in their foreign markets to make sure that, yes, the internal control environment is great, as well as we have some data analytics in place to identify those red flags and remediate them on a timely basis. And then finally, reporting up and following up on all of those activities, either through the assessment or monitoring, and making sure that management remediation occurs. So if there wasn't an employee program in place for education, that is actually done and retested and performed. And the last step, of course, was repeating this process throughout all of the organization's worldwide markets. So in the organizations that Jeremy and I've worked with, we came together and tried to identify what the key challenges were that these organizations faced, and why were they seeking out external help in tackling their anti-bribery or anti-corruption program to help with those programs. And these were the key themes that we had identified, and perhaps you can relate these to your organization. And the first of these challenges was that financial reporting controls are not bribery controls. So by now, most organizations have a fairly robust control environment around their financial reporting because of SOX. But consider the fact that that one-time donation to that favorite charity of that government minister of Made-Up-istan, it's really not an issue for SOX, because as long as that transaction was recorded properly and was was reported properly, then it's not an issue. But for FCPA, it is an issue. So it's a different set of controls that are used for anti-bribery, anti-corruption as opposed to SOX. Jeremy, anything to add on that?
No, I think that's a great point, Phil. SOX and FCPA are two completely different things. It's one thing to account for it correctly, but that definitely doesn't mean that you're going to be in compliance with the anti-bribery provisions of the FCPA.
Yep, exactly. And one way that some organizations tackle this problem is thinking, well, let's just add more application system controls. Let's prevent our users from actually inputting these transactions that may be grievous or in violation of these provisions. So implementing further application system controls ultimately, though, can lead to inflexibility, rejection, and ultimately workarounds. So, for example, requiring 2 or 3 levels of management approval before a charity donation can go out, that just leads to rubber stamping. It leads to inflexibility and workarounds, and also not a recommended approach to tackling anti-bribery, anti-corruption. So the question remains, how do we maintain business agility while addressing the issue? And then finally, well, not finally, but the next challenge that we see very often are that a lot of organizations tackle this problem with one-off initiatives. So producing an audit report or producing a report to say, yes, we've tackled this particular issue or brought in an external firm just for a one-time item doesn't promote a culture of efficiency or doesn't promote a culture of transparency, which is really required to make sure that you know the problem at its roots. So how do you make sure those mitigation efforts are lasting? Jeremy, anything to add on this one?
Yeah, I think that's a great point, Phil. One-time look doesn't provide that perception of detection. You were just talking about application controls and adding controls. That just leads to workarounds. A lot of times, some of the most effective controls are those that are continuous and knowing that your management is always watching. A lot of times, that can be some of the most effective types of controls.
Yeah, exactly. Yeah, it's just that fear of or that knowledge that your transactions are being monitored that is effective as a control.
Definitely.
And then finally, the stakeholders, both internal and external, need visibility. So you're performing all of these activities and making sure that your processes are well controlled. But how does your executive team know that? How do you know that as an executive within an organization that deals with foreign markets? How do you gain visibility into that? And how do you make sure that external regulators are confident enough in your processes in your organization that they can skip your organization and move on to the next one and scrutinizing them? So how do you demonstrate that to the authorities that you have an effective program in place? So things like the dashboard that Jeremy had mentioned in his case study are great ways to lend that both internal and external visibility. So we encounter our first polling question. So I'll hand the floor back, and we can.
Okay, thank you very much. Go ahead and launch our first polling question. Thank you for that great content, Jeremy and Phil. It's certainly tremendous risk exposure for companies doing business across the globe. A reminder for those of you after CPE credits on today's webinar, you'll have to answer all the questions we have during the webinar. Of course, we appreciate everyone's consideration in answering our polling questions. Time permitting, we will review the results of the polling questions during the Q&A to get comments from our speakers. Again, we'd like this to be an interactive experience for you, and we have a tremendous opportunity with our two great experts today. So we encourage you to please ask questions on today's topics via the questions box in your GoToWebinar control panel. I'm going to go ahead and leave the polling question up for another 10 seconds or so, and then I'm going to go ahead and hand the floor over to Phil. So I'm going to go ahead and close the polling question at this point. So Phil, the floor is once again yours. Please take it away.
Thanks, Ernie. So that's a pretty interesting question. I'm excited to see the results of that, but we'll move on to taking it down a level and now knowing the challenges, how do we actually go about approaching the solution? So it will be very very similarly modeled after what we had talked about in some of the previous case studies, but really a three-pillared approach to a solution for FCPA was what we saw as a formulaic or a systematic way of approaching the problem. The first of those pillars is self-assessment, and so conducting those internal control reviews, policy reviews, ad hoc analysis and sampling to gauge what the level of risk is in any particular business unit or geography you have in your organization. And for those business units and geographies that are of high risk, to implement continuous monitoring. So the timely alerts of suspicious activities, exception management workflow, and all while maintaining business agility and not implementing further application system controls. And then finally, to wrap all of those activities together in executive visibility through a dashboard for senior leadership to be able to action upon, and also for external stakeholders for their knowledge and comfort. So the first pillar of our approach is self-assessment, and I thought I'd drill into that a little bit more. And this is really, what is the likelihood of a bribery or corruption incident occurring in your organization's markets? So as I mentioned, conducting internal control reviews, which would be things like conducting anti-bribery policy, creating a formal anti-bribery policy, employee education programs so that those policies aren't just sitting on a shared drive or on corporate intranet somewhere, and then also ensuring that reporting hotlines are in place for tips and incidents to be able to be reported upon anonymously. One interesting area where you could be applying internal control reviews or assessments is to document the sources of revenue. I heard a story from one of the clients that I worked with that after reviewing one of their new subsidiaries, that their subsidiary actually was documenting as part of their revenue party planning, and party planning was not a core business line for them or core line of business for them, and this was very unusual. And when they dug into it further, these parties were being planned to woo potential clients in order to, and they were being put on to potentially woo potential clients in purchasing their products, and clearly not an area where you're actually creating revenue or wealth, but really it's just a method of potentially distributing or providing extravagant gifts or other activities that would be questionable in the light of anti-bribery, anti-corruption. And then finally, business partner, joint venture, and third-party due diligence. So making sure that there is an appropriate set of provisions in your policies around due diligence for business partners and joint ventures and third parties to make sure that all of their previous transactions and previous business activities do not include questionable behavior. So do they have a full, well-documented, are they well-documented in their financial transactions? Have they had any past violations of potential bribery? Do they deal with governments or do they use consultants and contractors or facilitators to bring in government business? So all of these things should be taken into account when doing your due diligence around business partners and joint ventures and mergers. Jeremy, anything to add around these internal control reviews?
Yeah, so I don't think I have any other specific points to add, but I would like to say, just kind of a point of clarification for everybody on the call. You've heard us talk about a couple things. One, that the controls for SOX and FCPA are different, and that we need to be doing these internal control reviews, but we don't want to be adding additional controls. You know, we just talked about that in the previous section. So one thing that I would challenge everybody on the call to do and really to consider is how can you integrate the components of the FCPA into your already existing internal control reviews. So instead of doing completely separate procedures just for the FCPA, how can you integrate that and really weave that into what is core to your business and you're already doing to help make that just as effective, but definitely increase the efficiency?
Yes, and a part of that integration is going to be some deliverables that come out of those assessment activities. So those management recommendations and control deficiencies that are identified from those assessment reviews need to be followed up upon to make sure that they're actually being implemented within the business. So making sure that you have a central location where you can distribute and track those deliverables, and potentially a good tool to do that, would be very important. And then the final question is, who should be performing these assessments? You can lean on an external assurance firm. You can work with an internal audit team or a compliance team. It's potentially better to go the internal route because these are the folks that know the business the best, and are then even after the initial assessment is being completed, they can also follow up with the business and management to be able to make sure that those things are being monitored and implemented properly. So moving on to our second pillar on continuous monitoring, this is implementing those strong detective controls to identify and document those red flags. And we'll be getting into some of the details around where you can actually create data analytics. But first of all, incorporating analytics to increase the effectiveness of your monitoring activities. So not keeping with just manual processes, but to incorporate technology to be able to do this will ultimately help you to maintain business agility instead of having formal approvals and structures in place or application system controls. But in order to implement these detective controls, it is important to create a common data model to deal with disparate systems. So one of the challenges that Jeremy had encountered was those 8 different business systems. So did you folks ultimately build a common data model? How did you do it, and what did you do around it?
Yeah, that's exactly what we did, Phil. We wanted to make sure that our testing was efficient and it was standardized across the board. But rather than trying to create 8 different versions of all of our tests, we determined it made the most sense to create one version of the test, but then create a model that we could essentially feed each of the data sets into that would create a harmonized or a normalized output that was then essentially the same format across every system, so the testing can be much more effective and much more efficient that way. And it will also help in the long run. New systems are added, new companies are added, new countries are added for that matter. Rather than recreating all of the tests, it's just that the common data model and adapting to fit to that. So it works as a much better long-term solution as well that way.
Yeah, certainly. And when we say data model, we mean this. If we're expecting a set of accounts payable transactions, we always expect these sets of fields. We expect an invoice number, an invoice amount, a transaction date, an entered date, and all of these key fields in the correct order and in the correct format, so that we can define that once and roll that out to the business to say we need this data in this format on either a continuous basis or a monthly basis, to make sure that we can do our analysis to identify those red flags using data analytics technologies.
Definitely.
So once you've decided that you're going to be implementing a set of continuous monitoring or detective controls, you need to then decide where you want to apply those data analytics. And unfortunately, or fortunately for us, anti-bribery, anti-corruption, these issues reach nearly all parts of the business. So all key major business processes, from vendor management to purchase to payables, general ledger, payroll, travel and entertainment expenses, all of these business areas can be used to funnel or channel funds to an unauthorized third parties. But I say fortunately, because in implementing these controls, you actually can gain other efficiencies out of the system that just come as part of the package. So when you do that additional due diligence, you're that much more comfortable with the vendors that you're working with. When you do that due diligence around your payroll, that you're that much more confident that all of the employees that you have on your payroll are true employees, and that they're not fictitious or being used to channel funds to unauthorized third parties, and that there's no waste there.
And one thing I'd like to add in there, Phil, anti-bribery and anti-corruption, we always tend to focus on the payments, the receipt of a bribe, the payment of a bribe. But especially with the FCPA, there is also an accounting provision that makes analyzing the general ledger just as important, because even if you don't violate the anti-bribery provision, you may end up violating the accounting provision. So it's important not to forget how the transactions are recorded, not just where the money's going.
Yeah, great point. And then finally, defining that remediation workflow. So it's great that you can identify these red flags and exceptions, but if business or you don't have staff actually actively reviewing them and documenting the remediation of them, then you might as well not be doing it. So having a formal process to document the follow-up and remediation, to identify the trend of control effectiveness, and then further refining those analytic logic parameters and processes, because it's inefficient to consistently generate analytic results that create thousands of false positives, and then your the business folks or your actual staff that are tasked with it they start to ignore the results of that analytic. And was this an issue that you had to come across with your implementation, Jeremy?
It is. I always recommend starting fairly broad so you don't miss some obvious things. I always like to have a few false positives in that first step. More likely, I'd like to err on that side. And I know that it continues to this day. It's been over a year that we've been dashboarding, and we probably refine the analytics every other month. Just as the business changes and adapts, the analytics need to adapt. They aren't a strict set of rules that you create once and apply for the next 30 years. They should be living and adapting as the business does.
Great. And so I'm going to hand it back over to Ernie for our second polling question now.
Okay, great. Again, this is a great, compelling content, so it's very much appreciated. And as a former finance professional at a company that was doing lots of acquisition, it kind of hits close to home. Again, as a reminder, for those of you on the webinar today, after CPE credits, you'll have to go ahead and answer this question. Again, we appreciate everyone's time in answering both all the polling questions. And as you see, this polling question is around the audience's perception of the risk exposures for FCPA violations. Again, we have a tremendous opportunity to tap the great knowledge of our speakers today. So we encourage you to ask questions at any time during the questions area of your GoToWebinar control panel. And if we do not get to these questions, we'll follow up with our speakers afterwards. And then we'll go ahead and keep this up around 10 seconds or more, and then we'll share the results during the Q&A session and get comments from our speakers. So I'm going to go ahead and close the poll and hand the floor back over to you. Phil, please take it away.
Great, thank you. So some common themes around areas where you can apply data analytics for continuous monitoring. Keyword search is one area where it can be applied across nearly any business process, but you do need to consider that you're going to want lists in multiple languages. So looking for things like facilitation, consultant, state, things that would be indicative of a potential bribe or hiding of a bribe. Another thing to be concerned with or to consider is minimum thresholds. So we're mentioning false positives. And one way to reduce the number of false positives that you get and overwhelming your business process owners is not overwhelming them with immaterial transactions. And there is a difference for the FCPA in particular of gifts versus bribes. And only transactions large enough to entice are important from the perspective of FCPA. Now, there are other legislations like the UK Bribery Act where there's less of a distinction. But for the FCPA in particular, only transactions that are material that would be significant enough to entice, only those would be important. Jeremy, what does that threshold figure work out in most of your implementations?
It varies. It really does vary. We have some organizations that, since they consider the accounting provision to kind of reign supreme, so to speak, there is less of a materiality threshold there, so we look at everything. Now, that doesn't necessarily mean that they will look into every single line item, but they still want to see it regardless of amount. Whereas there are others where it may be $10,000, and they say, well, for our purposes, anything less than $10,000 we're not going to be concerned with. And I think it's going to vary by company whether or not they are subject to the accounting provisions, and also, like you mentioned, whether or not the UK Bribery Act or other anti-bribery acts come into play, because they all have various rules, and you don't want to define a different set for every single provision. You almost want to one fell swoop, let's attack everything. So I think it's going to vary from organization to organization.
Great. Yeah, I totally agree. It depends on organization and also even within an organization's markets. So depending on whether you're looking at China versus Japan versus Brazil versus Russia, there are different thresholds even within each of those markets. But I wanted to look very quickly over some of the areas where we've done testing. So for example, identifying fictitious merchants in travel and entertainment expenses. One way that you can identify this is looking for merchants that are not being used by very many different individuals in your organization. So if you have a fairly, if you have a merchant where you're doing a lot of large transactions with, but nearly everyone in the organization uses them, say for example an airline, that's of low risk. But if you have a merchant that averages its transaction size in the thousands, but only 2 or 3 different people or even just one individual uses that merchant in the organization, then that raises a significant red flag. Another area that we can look at, and Jeremy mentioned this in general ledger, is to look for manual postings to system accounts. So most ERPs nowadays have accounts that are only posted to from by the system itself, and these accounts potentially could be utilized to hide potential payments that, or cash disbursements that did not flow through the procurement or accounts payable process, but instead are directly booked to the system accounts and therefore not highly visible. So that's certainly an area. Yep.
I think, Phil, that you just touched on one that everybody should definitely be considering, even though it seems kind of obvious, and that's cash. If you have a disbursement from cash or a credit to cash that's hitting the books and it's not flowing through any of your other systems such as procurement or payroll, I would think that would be a pretty big question. And I know a lot of people say, oh, that can't happen, that should never happen, we don't need to look for that. I'm a firm believer in if it shouldn't happen and it supposedly can't happen, you want to make sure that it doesn't, because it's really easy to review a list of 0 exceptions.
Yeah. And
at least you know that you're watching for it.
Exactly, exactly. Just having that in place and testing and making sure that it'll catch those when they do occur, it's just that much more comfort. And then new vendor monitoring as well. So in the purchase to payables process, a vendor that you've never done business before is at a higher risk. So if you're doing business with a vendor that you've never worked with before and it's a fairly significant transaction, just have another set of eyeballs on it and have your director of finance or yourself look at it when that comes through. And Jeremy, I think this one came from you.
Yes, and I kind of jumped ahead of myself a little bit, but cash payments, again, not recorded through the accounts payable detail. And I've talked with lots of organizations, and they all claim that this is impossible, it cannot happen. Yet time and time again, when we look at the cash transactions in the general ledger, it can happen. There are exceptions to every rule, and if someone knows how to get one of those exceptions through the system, it's very important that you're aware of that. A lot of bribes and in a lot of these countries that have high corruption indexes or indices, cash is king. And if you're using cash to bribe, cash can be one of the most important accounts to be monitoring. As we go on to the next one here, yeah, it's still in that same area, and proper payments and recording of those payments is you have to have again descriptions in there for your payments. A lot of the anti-bribery, anti-corruption laws and acts have not only an anti-bribery provision, but they also have an accounting provision. And in this case, you want to make sure that your invoices have proper descriptions so you know what you're looking at. Now, Phil mentioned earlier we don't want to have a bunch of extra system controls where somebody's just going to go in and type A, B, C, D, E, F, G as the description. So rather than forcing that in the invoice entry system, you can actually use an analytic on the back end to be more of a detective control and use it as a teaching point where people are learning that, wait a second, they're watching. I can't just force a bunch of gibberish through. It actually has to be a good description. So you want to make sure that you do have those descriptions. and it sounds a bit absurd, but if somebody is paying a bribe, ideally that invoice would be described as such, because if you have accurate books and records, all of the transactions must be accurately recorded, and if a bribe is a bribe, accurate recording would be using that in the description field. It sounds a little bit silly, but it's one of those items that you hate to overlook if it's going to be in the system and jumping right out at you. And so as we go to the next one here, I think this is one that that you're pretty familiar with.
Yeah, thanks, Jeremy. So sales adjustments and write-offs to customers. This is just making sure on the other side that potentially your organization isn't part of a kickback scheme itself. So if you're providing write-offs or adjustments to certain clients, this might be indicative that there's a kickback scheme or other fraudulent scheme going on, and that management should review based on either an aggregation by particular sales executive or by client, those that have significant adjustments and write-offs. And then also, finally, payroll employees without deductions is one way that you can identify fictitious employees on your payroll. So those phantom employees may not have any deductions associated with their payroll transactions. And so I wanted to hand it over to Jeremy to close things off around the executive visibility pillar at this point.
Thanks, Phil. I really appreciate that. Executive visibility we've talked about. Somebody has to be looking at all of these deliverables and these results. If we run these tests once, or even if we're running them every day and nobody ever sees the results of it, what good are they really doing? You have to have that documentation, and it really needs to be in the hands of the people that need to see it. And as we've gone through each of these very specific takeaways, which I hope everybody was paying attention to and can think of ways to implement those in their organization, from an overall fraud standpoint, I can see a lot of those are risk items that I'd like to see regardless if I'm an executive. It doesn't matter if I'm thinking FCPA or just general fraud risk. I would want to see those items. So it's important to take the analytics and design a deliverable around this that is going to be useful to an executive, but at the same time also useful to others. When we're talking about internal control effectiveness, it's something where you can just say, here are our findings, here are the red flags that we saw, here's your recommended action plan, here's what we recommend you do. That provides management what they need to actually address the issue, see where the risks are, and then take action. And that's what we want management to be doing. And then, as I mentioned in our example earlier, interactive reports are wonderful because it not only allows management to see the high-level analytics, and we'll show an example of this in just a second. Management can see the high-level analytics, but at the same time, the staff can then drill down into the detail of that. So if we're looking at this dashboard here and we see that we have two keywords that say bribe, I would want to know exactly what those two transactions are. And an interactive dashboard allows management to say, we need to see what these are, and maybe they have the interactive version, and they can actually just click on the number 2 or the word bribe, and all of a sudden they can see exactly what detail comprises those two hits. So I think that not only allows management a very useful tool for reviewing the risk and staying on top of FCPA compliance, anti-bribery and corruption compliance, but it also allows internal audit, the compliance team, finance and accounting. It allows them to also obtain what they need out of the dashboard so they can do their jobs better. So with that, we wanted to leave you all with some takeaways. First and foremost, anti-bribery laws are obviously much more restrictive than SOX. Everybody is familiar with Sarbanes-Oxley. We need to kind of take it another level. We need to get to the next step to really get there. However, while we focus on analytics today, compliance with anti-bribery laws is much more than just data analytics. Data is where everything is recorded. Ideally, if it's being recorded, that's where it's at. If it's not being recorded, it's obviously not in the data. But you need to consider things outside of the outside of the data. As Phil mentioned, the self-assessment, looking at policies and procedures, our hotlines available, so many other things that are outside of the data realm. Also, don't focus just on your procurement cycle. Money can go out of the organization in any number of ways, and it's very important to make sure that you hit all business processes that can possibly play a role in a violation of an anti-bribery corruption law or act. Next, it's also important to look for the prohibited activities. I don't know how many times I've talked with organizations and they say our people can't do that, they shouldn't do that, they wouldn't do that, I don't need to watch for it. And I realize it sounds really great in theory. However, it doesn't really hold water because you need to be looking for those prohibited activities if you really want to see if the prohibited activities are occurring. Finally, we've talked about executive visibility, and dashboards and the details really can help management accomplish their goals. It can also help develop kind of the end product of a very comprehensive compliance plan. And I think that having that end-to-end from the self-assessment all the way to the visibility is very important. Phil, what are your thoughts on those takeaways?
I think that's just right on the button.
Okay. Thank you. As we go to some pitfalls to avoid, everybody wants to know what to do, but it's always good to know what not to do. Number one, I just mentioned it, but saying my employees wouldn't do that or I trust my employees, that is not an internal control. I hate to say it. You would hope you would never have to say it. Trust is not an internal control. Relying on that as such is going to be a problem. So do not rely on that as an internal control. Secondarily here, you cannot just ignore compliance because that's how business is done in that country. And I wanted to bring up a quote from Laney Brewer of the Department of Justice, and this was actually in an FCPA, related to the FCPA. He said, "You don't get a free pass by saying we're doing business in a country where we believe bribery is rampant. If you're in a country that poses greater challenges, I am going to want to know, what did your compliance program do to deal with that? If it's state of the art and you truly were prepared for the environment you were in, that will be helpful to you." If the Department of Justice is saying that a robust compliance plan will be helpful to you, I don't know of many other sources that I need to hear that from where I'm thinking we need a good compliance program. And it doesn't matter what country you're in. The more risky they are, the more important it is. And finally, Phil touched on this, and I think it's just so true. A one-off initiative that's not sustainable is not good. If you look once and you're never going to look again, what have you really accomplished? You kind of take a step forward and then a couple steps back, and then you forget about it, and you never know that you even took a step forward to begin with. You want to make sure that you're looking at things that are sustainable and they're really going to help the organization and help the compliance plan on a go-forward basis.
Yeah, and to that point, that's where technology really comes into play as well. So as mentioned, you can create all those reports and put them on a shared drive, but ultimately that's not conducive to a change in corporate culture if that's what's needed.
I agree. All right. Well, Phil, thank you so much for that, and I think we're ready to turn it over for a little bit of Q&A.
Thank you very much, gentlemen. Just very, very compelling content, especially those red flags and being valuable to people and actually what to look for and how to deal with those. So that's tremendously valuable. Our first question, I'll start with Phil, and then Jeremy, please weigh in after Phil is done making his comments. Who internally should perform the testing you mentioned? Accounting, internal audit, or clients, internal professionals? Who do you think should be doing that testing?
Unfortunately, if you do rely on just accounting and finance to do it, there have been cases where these are folks that are actually have been part of the schemes themselves. So unfortunately, you do need to potentially look at an independent party such as an internal audit group that does not report into the regular finance lines of business to perform these assessments and internal control reviews. That would be my thought.
Yeah, I agree. I think that's definitely a great way to go. If you have the ability, I think, to maybe get an integrated team where you can bring in the knowledge of others, even outside of accounting, but just people that are familiar with how business is done in a certain country. I think that knowledge can be very valuable in developing your compliance plan.
Okay, great. Okay, our next question, I'll start off with Jeremy. What do you think are the biggest obstacles to getting buy-in from management and business process owners in standing up to an FCPA-based program?
I would say one of the biggest challenges that I've seen is just the vast amount of data that's out there, and organizations struggling to manage it effectively. I know Phil mentioned a couple times that you don't want to overwhelm the business process owners with results and false positives, and I've seen a lot of times that is what happens when somebody just gets really gung-ho and they don't exactly have a focused plan, and they end up overwhelming people with data, and it doesn't really benefit the organization. It just causes more challenges.
Yeah, and if I can add to that, I would say oftentimes it comes down to a business case. Anti-bribery, anti-corruption, on most people's risk radar or landscape is a low likelihood, high impact risk. And so, yeah, it is low likelihood that you are caught by, say, the Department of Justice or the FCC. But if you are, then you are in for deep trouble. Now, one other way that people can make a business case around this, as I sort of alluded to, is taking the approach and not just applying it to your data analytics and continuous monitoring to anti-bribery, anti-corruption, but looking at it as an overall efficiency and organizational business case efficiency play, so that you can identify also using the same technologies potential duplicate payments, or cases where you did not have to go through a proper procurement process, that procurement's been skipped, and so you may be overpaying, or vendor contracts are not being abided by. So all of these other activities can very efficiently be incorporated into a monitoring program if you take those initial steps and incorporate that into the business case.
Okay, great. Thank you very much. I'll direct this one to Phil. There's a couple questions related to resources. So are there any resources that you can point our folks to on two fronts? One is relevant keywords and phrases to use in searching for red flags. And the other one might be to identify risk exposures by countries, or just identify countries where these risk exposures are greater.
Yeah, I'll start with the second part of that, which is the risk corruption index. So it is published out there that there is a corruption perception index by, I think, Transparency International. So that is widely available, and you can bring that into your analysis for where you want to be applying your measures. And then the first part of that, which was what other additional resources can you go after? And we have a resources page at the end of this slide deck. But one key resource that you could be relying on is, or not relying on, but looking at, is ACL's published ebook around anti-bribery and anti-corruption, where we spell out potential keywords that are included there, as well as some of the analytics and data analytic tests that we have identified today.
Jeremy, do you have any resources or specific sources that you might add that might be helpful?
I think those are great. As far as just an overall resource, it's not keyword specific, but the actual FCPA resource guide that the Department of Justice has published. It's a little lengthy. It's probably not the most, not the lightest reading ever, but it is a very good resource guide, and you can glean a lot from that as far as some potential keywords and other things to look.
Okay, great. Thank you very much. I'm going to go ahead and launch the final polling question. As we have our final question for our Q&A, again, we will do our best to follow up with all the questions we didn't get to, follow up with our speakers, and get those answers posted up on Proformative.com. So a final question. So a company that does not have a compliance plan, I'll direct this to Phil first. How do I get started in doing an initial assessment of risk exposures and get that compliance plan in motion?
So there's certainly resources out there, such as AuditNet and other roundtables that you can work with in order to gain to build your assessment program around. We've actually worked with one of the organizations that has gone through this process, and we actually have an assessment program in our technologies and tools that we could help. If you have a conversation with some of the folks in our organization at ACL, we can help you with a program that's already been developed for this particular case and get you started on that.
Great. Jeremy, do you have any words for us here?
I would recommend it never hurts just to kind of take a step back and take it one piece at a time. I don't recommend trying to jump in and do everything at once overnight. take a step back, see where you have businesses, use some of these resources. Phil mentioned transparency. I believe it's transparency.com. Is that right, Phil?
It could be. Transparency International.
Yeah. Transparency International. Thank you. Sorry. Transparency International. Looking at that to see where the risks are. That's a great place to help risk profile where you're doing business. But then from there, look at any other risk assessments you've already done. If you have a risk in general in accounts payable, it's probably more likely that you're going to have an anti-bribery or a FCPA risk in accounts payable as well that plays off of that. So leverage what you've already done. Use some additional outside resources. Reach out to experts who do this on a regular basis. Try to get their insights because a lot of times they can, as Phil mentioned, they can guide you through the start of the process. But just take it a step at a time. It's not something you're going to accomplish overnight. It's probably not effective if you can accomplish it overnight. You want to make sure that you think everything through thoroughly, and just don't take it all at once. Take it a step at a time. Use your resources, including the work that you've already done. Don't discount that.
Okay, great. Thank you very much. That's going to conclude the Q&A session. Again, we'll work with the speakers to follow up on unanswered questions. A huge thank you to Jeremy and Phil for their time and insights. They're clearly thought leaders in their fields and an excellent source of information on today's topic. Note in the post-webinar survey we prompted to take as soon as you're done with the webinar. We will have the opportunity to express your interest in being connected with either or both speakers and their sponsor, ACL, with just one click or a few mouse clicks. Again, a thank you to today's sponsor, ACL. This limited thought leadership has allowed us to make this event possible. Just want to make a quick note here for a second. Registration is open for Proformative second annual Proformative conference. So please, if you're interested in that, please, registration is open on that. And then a final thank you to the audience for your valuable time. We hope to see you again soon at another Performative event or online at www.performative.com. Make the rest of your day great, everyone. Thank you very much.